Hello and welcome to BQ Prime. I'm Hiral Gadia. A lot of movers and shakers in trade today, and specifically from the large cap universe coming in. Joining us on the show to decode the same and what the investor should do is Gaurang Shah from Geojet Financial Services. Gaurang, good morning and welcome to the show.
Thank you, Hiral, and morning to all of you.
Gaurang, let's pick up a HDFC Life. Smart moves coming in there. And RBI's decision to allow the merged HDFC Bank to own over 50% stake in insurance entities has actually come in as a booster shot in HDFC Life's arm, and that's what is keeping it upright. What would this mean, and what would you advise an investor to do from a valuation perspective?
Firstly, let me speak about the sector overall, that is life insurance and general insurance. So general insurance, non-life insurance companies have done reasonably well. But the problem lies with life insurance companies, including the big boy LIC, which got listed a while back. And of course, the statement made by the Honorable Finance Minister during the budget, that created an overhang, at least in the near term, for life insurance companies. If you have to look at the number of people who are insured compared to the total population of India, I think there's a huge opportunity for life insurance companies to do well. This move will, my sense, reinforce the confidence of investors in life insurance companies. So possibly it's a step in the right direction, but I think the more focus life insurance companies do in business, creating new business, new premium, that is. And let me say this, Hiral, that post the pandemic, I think earlier a lot of people used to look at insurance as a product or an investment, a small investment to save tax. Pandemic has actually taught us that it is not only for a tax-saving instrument, but something that you do for your family members in case something has to happen to you. Large sum assured will ensure higher new premium run rate for life insurance companies. So we like LIC, HDFC Life, SBI Life, and ICICI Pru on the fundamental side from a long term. But it's a long way. I'm not saying this is a 1 year kind of an investment in life insurance companies. You need to have at least 2 years plus kind of time horizon.
Right. Moving on, let's look at the HDFC twins as well now. More time to comply with the PSIL requirements. That actually takes away the immediate burden from the bank as well. Apart from that, as we already mentioned, clarity in terms of holdings and the investments and subsidiaries, that is actually clearing the air for the investors as well, right? Now, taking the timelines into consideration, the clarifications that have come in from the RBI, what would you advise an investor to do between an HDFC and a HDFC bank?
This is like you are caught between the devil and the deep blue sea, because we have coverage on both of them, Hiral, and I think they both of them have been wealth creators for long-term investors. We maintain our coverage on both of them, and I think once the curtains are down on HDFC Limited via the merger into HDFC Bank, the kind of balance sheet that will stand, it's going to be tremendously strong balance sheet with lot of values attached to it. We are maintaining, either you are an investor in HDFC Limited or if you are an investor in HDFC Bank, and even the ratio that was announced here, I don't think it's going to be a deterrent to either of them. It's only going to create wealth. And once the entity stands, there is not going to be any competitors or peer companies that can come even close to the merged entity in form of HDFC Limited and HDFC Bank merger. Real estate sector is doing well. Interest rates is a pause by the MPC and RBI governor. Let's hope that the inflation doesn't crop up its ugly head and we have a long pause in terms of any moves on the interest rate front. So all these, backdrop of events that have been lined up, they point towards a substantial and a suitable long-term growth for housing finance companies, and HDFC Limited being the big boy of the sector, along with HDFC Bank, who's the largest player in private sector bank. I think they will do extremely well. And my sense is that it's going to be an investment which will grow over a period of time.
Right. Another banking counter which reported numbers is the ICICI Bank. Profits jumped around 30%, and this is mainly on the back of the core income as well as the margins as well, right? And it has been somewhere a beat in terms of what the street was estimating. What do you make of an ICICI Bank, and do you think a good one to still invest in?
Definitely, yes. And if you actually go to see over the last year and a half, ICICI Bank is one of the top performers. When you do a comparison between HDFC Bank, Axis Bank, ICICI Bank, or a Kotak Mahindra Bank, or an IndusInd Bank, we have a fundamental coverage on ICICI Bank. And our focus or our view at Geojit Hiral is that credit demand is going to grow exponentially. And if you just look at the verbatim given by the management for these financial or banks, they are extremely confident about advances, deposits, and CASA, especially the credit demand. This will possibly keep the net interest income and margins at an elevated level. Gross and net NPAs are coming down. Your provisioning is coming down, and possibly, if if we believe, Hiral, that India is going to become the next trillion-dollar economy, then there's going to be a significant amount of role that the banking and finance sector will have to contribute. We remain positive. Our targets are somewhere close to about 1150 to 1200 on ICICI Bank.
Right. Another banking counter is a Yes Bank. Now, clearly a 45% dip coming in terms of their profitability on the back of higher provisioning. Operating expenses were also higher. How are you looking at a Yes Bank?
This has been an unfortunate one. Let me say this, and we had a coverage on Yes Bank. We dropped it because of the concerns surrounded around the balance sheet, and of course the earlier management. And what happened is all history, and we all know about it here. Unfortunately, the new management that has come in, they have been trying very hard to make the balance sheet and the bank turn around, but it's not visible in the number. So that's a big concern. And given the kind of, lot of people have got stuck into this particular stock, Yes Bank. Every move that you see on the higher side is witnessed by selling pressure. So I think in case, if you're not invested in Yes Bank, then there are better banks to look at. For example, IDFC First Bank, or even a federal bank, as a matter of fact. So we would possibly avoid this particular bank. And since we have dropped the coverage, I think it's prudent on my part to at least advise your investors to look at IDFC First Bank or a federal bank if you're looking at small private sector banks.
Right. So that's with regards to the banking space as a whole. Coming to Reliance Industries, this is going to be an interesting play from here on as well, because clearly the outlook that brokerages are talking about seems to be really robust. And this is looking at across verticals, right? Now, taking the demergers into consideration that could be on the annual, what would you advise an investor to do from a valuation perspective?
So, for me, here it will be a little bit premature to talk about, because we have a coverage on Reliance, and the consolidated balance sheet and businesses under Reliance Industries Limited. We have a target of somewhere close to about 3,000. And even going forward, I think the advisors to the company will play a very significant role. And we all know the history as to wealth creation. And as and when the businesses start getting demerged, I think it's going to unlock value for retail investors. So stay put. Whether it happens or not, we'll have to wait and watch. But I think valuation will be fair and just, and investors into Reliance Industries will gain a lot.
Right. From the pharma pack here, Sun Pharma, which is under pressure, and this is because they've entered into a consent decree with US FDA over their Mohali facility as well. In fact, the stock has slumped the most in over 19 weeks. How are you looking at the pharma pack? Because that's something which is really, there's no major direction that we're getting from this sector right now. It turns up when everything else is down. How are you looking at it?
So you absolutely bang on, Hiral. I think pandemic news flow drives the pharma sector, depending upon which way the news flow is formed on the pandemic side. Recently, we had a new variant and its effect. We saw pharma companies rallying for maybe about a day or two, but then they go into hibernation. With Sun Pharma, not only Mohali but Halol facility is also problematic. We have a coverage on Sun Pharma. Our view on the pharma sector is at best neutral to flat performer. Within the pharma universe, you will have some companies, they may do well depending upon what the news flow is. For example, you mentioned Sun Pharma that we cover, Dr. Reddy's and Divi's Laboratories. Our sense is that these three companies would do reasonably well compared to the pharma index or other companies listed in the pharma universe. Bad news on pandemic, pharma sector does well. Good news, pandemic coming down, number of patients going down will open up downside for pharma companies. So that's how it's going to be. I think it's going to be more of a news-based move on the pharma sector and companies rather than performance.
Right. So that's with regards to Sun Pharma. And from the IT pack, you have a Wipro, which is in focus today on the back of the buyback news. What would you advise an investor to do?
So Wipro is the last one in the list amongst the large cap IT names here. And this buyback keeps not only Wipro but any related stock a little bit afloat for maybe a couple of days till the time the news flow is done and dusted. And I have always believed, Hiral, that buybacks are more of a small, short to medium term kind of triggers, and it does not really impact. And if you are a long term investor, then I don't think you need to rush in and tender your shares into the buyback. Of course, it all depends upon the amount of the buyback and how much of proportionate shares are taken back by the company, and the rest come back to you. So it's more of a short to medium term trigger. But in terms of order of preference, large cap IT, we prefer TCS, HCL Tech, Tech Mahindra, Infosys, and then Wipro. So that's the last name priority as far as large cap IT names are concerned.
Right. So that's going to be an interesting play to watch out for as well. Thank you, Gaurang, so much for joining us on the show and giving us the views with regards to stocks which are making news today. Thank you. Stay safe and speak to you soon again.
Thank you so much. Take care. Bye-bye.